I'm joined by Peter McGuire, who's the CEO at Exim Australia. Great to have you on the show, Peter. First of all, crude has been range bound this morning, around that $90 per barrel mark. Do you think all the risks have already been baked in? And if there is no further escalation between Israel and Iran, would you expect crude to stay around these levels, or would you still say that $100 could be a possibility?
Well, Nandita, lovely to join you from Sydney. I think there's so many components to this. You've got possible supply disruptions, where we are as far as, the geopolitical situation. This is just a work in progress. We need to see retaliatory, what happens as far as Israel. We need to see other participants across the Middle East. I just saw Karg Island has been attacked from Iraq. So all of these sort of moving parts need to absolutely be absorbed into the market. And then we look at price, and price is the true performance metric. And I would say that you probably, with this time of year, I wouldn't be surprised to see it edge up higher than where we are at the moment.
Right. What about gold? It has seen a spectacular run. On a YTD basis, gold prices are up almost 15%. Do you see chances of the yellow metal hitting 3,000 in the near future amid safe haven demand?
Well, I think there's just, the appetite has been dramatic as far as central bank purchasing over the last couple of years. That's nothing short of mind-blowing. And you're looking at China's appetite has just been off the charts, followed closely by Turkey and India. So there's the first part. Then you've got domestic demand has been incredibly hard as far as retail land. And then the likes of Costco selling up to $200 million worth of gold per month. Then you've got the other side of it. We've had such a strong rally to the upside. I think that momentum will continue. And so, yes, 3,000 could be a stretch, but if you ignite geopolitics behind it, then really that possibly could be a price target.
Right, hold that thought, Peter. I'll come back and talk to you about other metals as well, key takeaways from the TCS numbers. But Peter, talking about the metal pack, there has been a ban on Russia metal from US and UK, right? In the wake of that, we've seen aluminium, zinc, copper prices surge, on the LME. Going forward, copper was already at 15-month highs, if I'm not mistaken. Do you expect more upside from here for all these metals that I mentioned?
Well, as you said, Friday was just a very, very strong day. If you're looking at, between 2.5% and 1.5% up, if you strap it across aluminium, copper, nickel, zinc, tin was very, very strong. So, Nandita, I think that when you're sitting at 9,500 a metric ton for copper, it's had a very strong rally from that 86, 87. It really was in no man's land for such a long period of time. We got down to nearly 8,000 a metric ton. So we're entering a bull market mentality in the sense of being up 20%, and we're very close to that. So the overall momentum across the base metal market has been one of very, very strong dynamic growth, and I would say that it's probably going to continue in the short to medium term. So yes, strap yourself in. It could be a very, very good, strong move to the upside.
Right, that's the view then on the base metal pack. But I'm afraid, Peter, we are running out of time. We are a little strapped for time this morning, but I wish to have a longer conversation with you sometime soon. Thanks a lot for taking out time and joining in this morning.
Thank you, Nandita.